In the world of South African banking, few names carry the weight of history, quite like Standard Bank. Founded over 160 years ago, it stands not only as one of the country's oldest financial institutions, but as a true continental force. From its colonial era beginnings as the Standard Bank of British South Africa, the institution evolved from a quote-unquote imperial bank into Africa's largest financial powerhouse, with current assets valued at over a whopping 3.3 trillion rand. Known locally as Standard Bank and across much of the continent as Stanbic, its reach spans more than 15 African countries and even once held interests in Argentina, Turkey, and Russia. Some of the bank's early expansion was shaped by a close relationship with global banking giant Standard Chartered, a partnership that helped define its cross-border operations before the two eventually went their separate ways. And from there, Standard Bank didn't just grow, it conquered. Through bold mergers, strategic acquisitions, and a relentless drive to expand, it became the beating heart of African finance. Today, the bank serves tens of millions, is shaping economies and empowering futures. But what's the secret behind this 160-year reign? Hi, and welcome to Mzansi Business, and this is the story of Standard Bank. The story of Standard Bank begins in 1862, but surprisingly, its roots lie not in South Africa, but across the seas in London. It was born as the Standard Bank of British South Africa, founded by a group of ambitious businessmen led by Scottish entrepreneur John Paterson, as a way to link British capital with Africa's fast-growing economies. The bank's mission was to provide banking services in the rapidly growing British colonies of Southern Africa. As you may know, South Africa had come under British colonial rule in the 19th century. The bank's first operations in South Africa itself came the following year, in 1863, when Standard Bank opened its first branch in Port Elizabeth in the Eastern Cape, a strategic location as it was a major port for trade, especially wool. From there, the bank quickly expanded to other towns across the Cape Colony and throughout South Africa, mainly through mergers and acquisitions of smaller banks. In the year 1883, the bank was renamed from Standard Bank of British South Africa to just Standard Bank of South Africa, as it began building a huge footprint in the country. As trade and settlement spread, so did Standard Bank. In 1870, the bank opened a branch in Kimberley right as diamonds were discovered, playing a key role in financing and developing of the diamond mines. In 1885, the bank moved its headquarters in South Africa from Port Elizabeth to Cape Town, and the following year, in 1886, the gold rush of the Witwatersrand pulled Standard Bank into Johannesburg, with the branch initially operating from an actual tent and making it the first bank on the Witwatersrand goldfields. Standard Bank's regional expansion in Southern Africa continued steadily during the 19th century. It entered Botswanaland, modern-day Botswana, in 1890. And in 1892, established a presence in southern Rhodesia, today's Zimbabwe. By 1894, the bank had also expanded into Mozambique. These moves reflected Standard Bank's strategy of following trade and colonial development routes, positioning itself early as a dominant financial institution across southern Africa. By 1901, Standard Bank had opened its 100th branch, and a few years later, in 1905, it established its first branch in northern Rhodesia, which is today's Zambia. In 1908, the Standard Bank building was officially completed in Johannesburg, standing as a true banking landmark. Remember, Standard Bank had begun its operations in the city decades earlier from a simple tent serving the growing community of miners and traders during the gold rush. The move from a temporary tent to this grand 5-story building vividly reflected just how much the bank had grown. In 1915, the bank opened its first branches in Southwest Africa, which is modern-day Namibia. In 1953, Standard Bank's head office moved from Cape Town to Pretoria, and from Pretoria to Johannesburg in 1959. In 1958, Standard Bank became the first South African bank to enter the hire purchase and leasing field after acquiring a stake in the National Industrial Credit Corporation. In 1962, the bank celebrated its centenary, marking 100 years of growth and transformation into one of Africa's most powerful financial institutions. That same year, Standard Bank of South Africa was established as a subsidiary to conduct business in South Africa and Namibia, while its London-based parent company was renamed Standard Bank Limited. In 1966, Standard Bank became the first South African bank to enter the credit card field by acquiring a controlling interest in Diners Club of South Africa. In 1967, around 5 years after South Africa became a republic, shares in Standard Bank were offered to the South African public. With a listing on the Johannesburg Stock Exchange, a major shift occurred in 1969 when Standard Bank's parent company in London merged its overseas operations with London-based Chartered Bank of India, Australia, and China to form Standard Chartered Bank. A separate holding company, Standard Bank Investment Corporation, or SBIC, was established as the holding company for Standard Bank's South African interests. This newly formed holding company, SBIC, would list on the JSE in 1970 under the trading name Stanbic. And pretty much from there, Standard Bank focused on African markets while Standard Chartered expanded into Asia and other global regions. It's important to note that in the coming years, Standard Chartered Bank would slowly sell off its shares in the Standard Bank Investment Corporation, but we'll talk more about that in a bit. In 1975, Standard Bank launched a standalone credit card, and in 1977, it opened a branch in Soweto, becoming the first bank to operate a full branch in the township. In 1978, Standard Bank acquired a 25% stake of the Liberty Life Controlling Corporation, giving it a foothold in the insurance industry. Standard Bank would acquire an additional 25% stake, taking its holdings in the Lib Life Controlling Corporation to 50% and giving it joint control over Liberty alongside Liberty Investments. In 1981, the bank continued its leadership in innovation by launching Standard Bank ATMs, becoming the first commercial bank in South Africa to do so. After South Africa became a republic in 1961, and especially during the apartheid years, there was a growing pressure for local control of major financial institutions. International investors and global institutions were under increasing pressure to withdraw from the apartheid-era South Africa. And in 1987, there was a major change in ownership when Standard Bank's parent company, Standard Chartered, sold its remaining 39% stake in the Standard Bank Investment Corporation. The buyers of this 39% stake were Liberty Life Association of Africa and a consortium of South African institutional investors. And from this point, Standard Bank became a fully South African-owned group, with Liberty Holdings as a major shareholder and strategic partner, with an approximate 30% stake, in which they increased to up to 40% over the years. The source also states that Old Mutual had a 20% stake in Standard Bank after the Standard Chartered deal, but I couldn't find any information on when they initially acquired stakes in the bank. It is also important to note that when Standard Chartered sold its stake in Standard Bank, the divestment primarily involved its South African operations, the Mozambique operations, and possibly its Namibian operations as well. This meant that Standard Bank essentially had to rebuild much of its African footprint from the ground up, re-establishing its presence and operations across the continent. In 1988, Standard Bank acquired a 49% stake in Union Bank of Swaziland. I believe this was their first wave of expansion into Africa since Standard Chartered's divestment. Following the acquisition, the bank was renamed Standard Bank of Swaziland, later rebranded as Stanbic Bank Swaziland in 1994 and Standard Bank Swaziland in 1997, and nowadays known as Standard Bank Eswatini. In 1989, Standard Bank opened its first international branch in Taiwan. In 1990, Standard Bank unveiled its new head office complex in Simmons Street in Johannesburg, and in 1992, Standard Bank Investment Corporation acquired the African operations of ANZ Grindlays Bank, a British-Australian financial institution with a significant presence across the continent. The acquisition included Zimbabwe, Zambia, Kenya, Botswana, Uganda, and the Democratic Republic of Congo, enabling Standard Bank to rapidly expand its regional footprint by integrating established banking operations in these markets. To differentiate its newly acquired entities from its former major shareholder and now competitor, Standard Chartered, most of the acquired banks were rebranded as Stanbic Bank, derived from Standard Bank Investment Corporation. Also, in 1992, Standard Bank entered Madagascar through a joint venture when it helped to establish Union Commercial Bank, or UCB, alongside Mauritius Commercial Bank and other local partners. Standard Bank would hold a 10% stake in this venture at its founding, allowing the company to maintain a strategic presence in Madagascar without establishing a full branch. That same year, Standard Bank became the first South African bank to be granted a banking license in Britain and began operations in the country. In 1995, Standard Bank acquired the operations of the Meridian Bao Bank in Tanzania, and later renamed it Stanbic Bank Tanzania Limited. Also in 1995, Standard Bank Group entered Lesotho by acquiring Barclays Bank's local operations, forming Standard Bank Lesotho. 4 years later, in 1999, it expanded further by purchasing a 70% stake in the struggling state-owned Lesotho Bank. This laid the groundwork for the 2006 merger of the two entities, creating today's Standard Lesotho Bank. In 1997, Standard Bank introduced its website as well as internet banking services, and in 1999, a bank known as Netcore, today's Nedbank, made an unsolicited bid to merge with Standard Bank, aiming to create the country's largest banking group with an asset market share of over 35%. The proposed merger sparked significant debate and concern among various stakeholders, business analysts, and of course the public. It is said that talks went on for a few months until Finance Minister at the time, Trevor Manuel, ruled against Netcore's hostile takeover/merger bid, emphasizing the importance of maintaining competition in the banking sector. This decision effectively halted the merger and helped preserve the competition landscape of South Africa's banking industry. Also, by 1999, Liberty Life still held about 40% in the Standard Bank Investment Corporation, right? Their 40% share in the SBIC comprised of about 23 to 27% direct stake through the Liberty Life Company and about a 13 to 17% indirect stake through holding company Liberty Life Controlling Corporation, which Standard Bank already had a 50% stake in, as did Liberty. But in that year, 1999, Standard Bank bought the remaining 50% interest in Liberty Life Holding Company, the Liberty Life Controlling Corporation, to own it fully and thereby increasing Standard Bank's control within the group, bringing the percentage of 13 to 17% stake back to SBIC. And shortly after this, Liberty Life would then unbundle its roughly 23 to 27% stake in the Standard Bank Investment Corporation, distributing it to its shareholders to simplify its group structure and to reduce overlapping ownership. As a result, Liberty Life's direct involvement in the Standard Bank Investment Corporation was greatly diminished, while Standard Bank consolidated indirect control through LLC, and public and institutional investors became the dominant shareholders, creating a broader and more transparent ownership base. The transaction also gave Standard Bank a significant shareholding in the Liberty Insurance Company. In 2001, Standard Bank Group expanded its African footprint by establishing Standard Bank Mauritius Ltd, a fully owned subsidiary of the group. In December 2001, Standard Bank acquired 60% holding in the Commercial Bank of Malawi. The bank was later renamed as Standard Bank Malawi. In 2002, Standard Bank acquired 90% of Uganda Commercial Bank, the largest commercial bank in Uganda at that time, merging the newly acquired bank into its existing Stanbic Uganda operations. That same year, the bank established ZAO Standard Bank, a Moscow-based, fully owned Russian subsidiary of the Standard Bank Group. The new Russian subsidiary was only granted its Russian banking license in 2003 though. Also in 2002, the Standard Bank Investment Corporation rebranded as Standard Bank Group, while retaining the Stanbic branding in some African countries. That same year, Standard Bank Group and Liberty Life merged their separate asset management divisions to form a new joint brand called Stanlib. The move aimed to simplify their overlapping investment operations, reduce duplication, and create a stronger, more unified presence in South Africa's asset management market. In 2007, Standard Bank Group acquired a 67% share of the Turkish bank Dandas Unlu Securities and would operate under the name of Standard Unlu until 2012, when Standard Bank sold its shares down to 25% and the Turkish subsidiary was named Unlu & Co. That same year, 2007, Standard Bank expanded its international footprint by acquiring Bank Boston Argentina, which it subsequently rebranded as Standard Bank Argentina. The move marked the group's entry into South America, aligning with its strategy to grow beyond Africa and to establish a presence in key emerging markets. In 2007 still, the Standard Bank Group acquired a controlling stake in Nigerian bank IBTC Chartered Bank. The acquisition gave Standard Bank majority ownership and marked a significant step in its expansion into Nigeria, one of Africa's largest banking markets. Following the deal, IBTC Chartered Bank merged with Stanbic Bank Nigeria to form Stanbic IBTC Bank PLC. Also in 2007, Standard Bank entered a landmark partnership with the Industrial and Commercial Bank of China, which acquired a 20% stake in the group for approximately $5.5 billion, the largest foreign investment in South Africa at the time. As part of the deal, the two banks also formed a joint venture, ICBC Standard Bank PLC, to focus on corporate and investment banking across Africa, enabling both banks to collaborate on infrastructure, energy, and resource projects across the continent. In 2009, Standard Bank would continue with its international expansion when the group announced plans to acquire 33% of Russia's second biggest investment bank, Troika Dialog. Standard Bank extended a $200 million convertible loan to Troika Dialog, which was to be converted into equity upon regulatory approval. And in addition to the loan, Standard Bank agreed to transfer its Russian subsidiary, ZAO Standard Bank, to Troika Dialog. This move effectively merged Standard Bank's Russian operations with Troika Dialog, aligning both entities under a unified brand. Troika Dialog was acquired by Russia's biggest bank, Sberbank, in 2011, though with Standard Bank receiving $372 million for its 36% stake in Troika. Also in 2009, Standard Bank secured a landmark $1 billion loan facility from 4 major Chinese lenders. The 5-year agreement marked Standard Bank's first major fundraising effort in the Asian capital markets and came at a time when global credit conditions were still fragile following the 2008 financial crisis. The deal was significant because it demonstrated China's growing confidence in Africa's banking sector and deepened the financial partnership between Standard Bank and Chinese institutions. In 2010, Standard Bank expanded into Angola, partnering with local investors to comply with foreign ownership rules and holding a 51% stake in Standard Bank Angola. By 2011, Standard Bank had opened its 500th branch, and that was in Africa alone, excluding its South African branches. And in 2012, it launched its banking app, which was later relaunched in 2014. Also in 2012, Standard Bank expanded into South Sudan through its subsidiary CFC Stanbic Holdings, which had been formed earlier in 2007 when CFC Bank merged with Stanbic Bank Kenya. In 2013, Standard Bank launched its U-Count Rewards program, rewarding customers for using their credit and debit cards, and in 2014 launched the mobile payment app SnapScan, allowing customers to pay via smartphone using QR codes and a secure PIN. SnapScan was launched in collaboration with tech company FirePay, which Standard Bank acquired a majority stake of in 2016. In 2017, the Shift app was launched by Standard Bank as a digital solution to simplify foreign exchange transactions for South Africans. Since its inception, Shift has undergone significant enhancements to broaden its offerings, including allowing users to invest in global equities and exchange-traded funds, ETFs. In 2018, Standard Bank officially launched its subsidiary, Stanbic Bank Côte d'Ivoire, marking a significant milestone in the bank's expansion into West Africa. Also, in 2018, Standard Bank launched Standard Bank Mobile, a mobile virtual network operator that initially operated on the Cell C network. The service was later rebranded as Standard Bank Connect in 2024 and migrated to the MTN network to enhance coverage as well as performance. In 2019, Standard Bank became the first bank in Africa to move its core operations to Amazon Web Services, marking a major step in its digital transformation strategy. And that same year, the bank announced a reduction of 91 branches and 1,200 staff due to a growing use of self-service channels and a branch network becoming less relevant. In 2020, Standard Bank acquired a 40% stake in Payment24, a South African technology company that provides digital fuel management and payment solutions. This move was to support the bank's fleet management operations. Standard Bank had been active in the fleet management space for many years. We didn't explore this in detail in this essay due to lack of information. In 2021, Standard Bank finalized the buyout of minority shareholders in Liberty Life Holdings, fully integrating the company into the Standard Bank Group. Also in 2021, Standard Bank launched its Standard Bank Insurance app, giving customers a simple digital way to manage all their insurance needs. And in 2022, Standard Bank was ranked the most valuable banking brand in South Africa and Africa, a feat it repeated in 2023, 2024, and 2025. In 2023, SnapScan, in partnership with Standard Bank, launched the Snap Store Pro point-of-sale machine, modernizing payment solutions for businesses across the region. In 2024, after Ethiopia passed legislation allowing foreign banks to operate in the country, Standard Bank has since expressed strong interest and are expected to be one of the first foreign-owned banks in the country. Also in 2024, Standard Bank South Africa entered into a strategic partnership with Huawei aimed at accelerating the digital transformation of South Africa's financial sector. In the year ending December 31st, 2024, Standard Bank reported headline earnings of 44.5 billion rand and total assets of 3.3 trillion rand. As of 2025, Standard Bank serves 20 million clients across 20 sub-Saharan African countries. The Standard Bank Group also reported headline earnings of 24 billion rand for the first half of the year, with current total assets of 3.4 trillion rands, reinforcing its position as Africa's largest bank by assets. One aspect not previously highlighted in this essay is Standard Bank's international footprint through its regional offices, which play a key role in supporting its African operations and global partnerships. Standard Bank currently has regional offices in London, New York, Dubai, and Beijing, extending the bank's reach beyond the continent and facilitating trade, investment, and client services in these major financial hubs. Also, Standard Bank had long supported South African arts and culture, sponsoring the Joy of Jazz Festival since 2001, recognizing emerging talent through the Standard Bank Young Artist Awards, and showcasing artists at the Standard Bank Art Gallery in Johannesburg, highlighting the bank's commitment to nurturing creativity across the country. Standard Bank was also a long-time sponsor of Cricket South Africa, including the national men's team, as well as being the official banking partner of both Kaizer Chiefs and Orlando Pirates during the early 2000s, although it seems Standard Bank took a step back from sports sponsorships around 2011. And just for fun, this is the evolution of Standard Bank's logo. And if you haven't noticed, Standard Bank's logo is the flag that was in the earlier logo. Today, Standard Bank offers a wide range of financial services for individuals, businesses, and investors, including things like insurance products, corporate finance, wealth and asset management services, fleet management services, and many more. They also have a strong presence in real estate finance. So who owns Standard Bank today? As a publicly listed company, its ownership is shared among a range of institutional investors and the general public. The largest shareholder is the Industrial and Commercial Bank of China, with a 19.7% stake. The Public Investment Corporation, which manages the government employees' pension fund, is also a significant shareholder with a 14.3% stake. And yeah guys, that's pretty much the story of Standard Bank. In its more than 160-year history, Standard Bank has consistently demonstrated resilience, vision, and adaptability. Through strategic growth, innovative solutions, and a commitment to meeting the needs of millions of clients, it has become a cornerstone of African finance. Looking ahead, the bank is well positioned to continue driving economic development, expanding access to financial services, and embracing the opportunities of a rapidly evolving global and digital landscape. If you like this content, please consider subscribing to the channel. I'm Melekai, and this is Mzansi Business. Thank you for joining us.